Welcome back, everyone, to Lamb's Cryptoverse. Today we're going to talk about what I call risk indicators. Basically, I think we're at risk of the markets going down, and so I think the probability is higher that the market could have a short-term decline. This isn't just for stocks generally. Basically, it's all equities and all Bitcoin and crypto. They're all susceptible to declining. And I think this could happen in early February, late January, early February. And I'm putting out this video now because it takes a long time to make these videos and I didn't want to be late. So consider this like an early, if you will, canary in the coal mine. So let's get started because I have 16 slides to go through. First of all, there's different ways to read risk. You can look at charts, trend lines, Bollinger Band, DMARC indicators. You can look at the CNN Fear Greed Index. You could even look at internet search trends. Well, speaking of AI, you can ask OpenAI, the ChatGPT, ask that computer what it thinks of the market. You can look at options data from the CBOE. You can look at the futures positioning data, what's called COT, Community of Traders data from the CFTC. There's a lot of acronyms here. You can look at your own indexes that you create on your own, like me. I created my sentiment index, which I'm going to show you. And lastly, there's a whole bunch of crypto indicators, and some of them are called OCTA, meaning there's another acronym, On-Chain Technical Analysis. So let's get started. First of all, the market's been going up like crazy, not just stocks, but crypto, and I'm sure you're aware of this. Look at this. There's green everywhere. This is a heat map. I'm sure you know how to look at heat maps, and this is a 1 month change, the trailing 1 month change. And you can see that Bitcoin is up nearly 40% over the last month, and Solana, which has had a near-death experience, is up 140 plus %. That is amazing. And Avalanche is up over 88% because of all the news going on with Ledger. Remember Ledger, I'm sure if you saw the news, it's not just a wallet anymore. They're moving towards working on an ecosystem. And Avalanche is working on that, and they're working on that with Amazon. So that's a really interesting combination. And there's also some other ones that are doing well too. In terms of fundamental news, I think the number one project right now in terms of trending good news is Polygon/Matic. And you can look that up on your own because we're doing market timing right now. So let's get started. So the first sentiment indicator we're looking at is the CNN Fear and Greed Index. This is a contrarian index. And we're at greed now. So because of that, that means we should be fearful. We should be worried that the equity market could decline because everyone's getting bullish. So remember, this is a contrarian indicator. And you could see in the right here on my notes, you could see how it's calculated. It looks at credit spreads, things like that. Next, this is looking at charts. So I'm only focused on two indicators here, but you can look at like dozens of indicators, like I said earlier, DMARC indicators and whatnot, Bollinger Bands. So right now I'm looking at the 50-day moving average versus the 200-day. So what's going on right now in S&P is very interesting because we're above the 200-day moving average, which is bullish, and we're breaking out at a 50-day moving average. So some would call that bullish. I would say you need to be careful because we've got a lot of upside trending of the market, including, I don't show it here, but a strong RSI. And remember, RSI, relative strength, is like a stochastic. It goes up and then it goes down, up and down. So right now, if you're looking at Bitcoin or the stock market, we're at the top level of that RSI. But what I want to focus on today is the trend line. And that trend line is going down from the peak of the S&P. I think it was around 4,800. So what you do is you draw a trend line down to the short-term peaks, and what you're getting is that we're breaking the trend line. So some may view that as a positive. I don't. I think that's signifying overhead resistance during a bear market. So what you have to do is first label what we have. Do we have a bear market? Do we have a bull market? Do we have just something going up and down? So I think it's a bear market. So when you have a major regime shift, that's how I know we're a bear market, in my opinion, because we have a major regime shift, not just in terms of the market trending down, but we have fundamental change, meaning tight liquidity, and the Federal Reserve is raising interest rates. So that regime change tells me that we may get a recession and that we have a bear market. So because of that, I'm considering this trend line as overhead resistance. So I think the S&P, which is around 4,100 now, I think it could go no more higher than a few percent, maybe to 4,200, 4,250. And then you could double that for Bitcoin, because remember, Bitcoin has a beta, BETA, a beta of around 1.5 or so, who knows, 1.5, 2, these betas change over time. So it has a beta of about, let's just call it 2 with the S&P. So if the S&P could go up another 3 or 4%, the crypto / Bitcoin could go up twice that, or 1.5 to 2 times that. Internet search trends. This is something people don't talk about, but I like to see what people are looking at when they're searching Google. As you could see, they haven't searched for bear market since June. There haven't been many searches. So as a contrarian, I consider this a bad sign. Equities options data. Again, this is a contrarian indicator, and the latest reading we have is around 0.51. That's equity put to call, and 0.84 for the total put to call ratio. And I'm finding some noise in this data. It hasn't been too reliable, and it's been too volatile. So what I like to do is take a moving average, which we don't have here. But overall, with or without the moving average, you could see that we're near a 1-year low for this. So this is a bearish sign for the stock market. Futures positioning, there's a lot of ways of looking at this. So I'm looking at commitment of traders, and that's in green. And these are large speculators. So the green line is negative. You could see minus 53,000 contracts. And the red line is positive, and that's the commercial players taking the other side. So what's going on is large speculators like big institutions, hedge funds, they're shorting the VIX. So that means they expect the VIX to go down, and conversely means that they're expecting stocks to go up. So I take this again from the contrarian point of view, that stocks can go lower. And you can look at a lot of different data points for this. I'm only chose one, the VIX. There's lots of, obviously, lots of futures products that are being shorted out there and long. Now, here's something people don't talk about. Stocks above the 200-day moving average. Now, a lot of people are saying that the markets, including Bitcoin, have already reached their bear market bottom. But if you look at equities here, I don't think they have. Because as I said earlier, we're in a bear market, and we haven't even reached the low value of the stocks above the 200 days moving average. This percent, by the way, it's a percent. I usually look for a percent of 10. I want 10% or lower to signify a major capitulation and bottom in the stock market. We saw that in 2020 at the market bottom. We even saw that at the 2018 December bottom, and we saw that at the 2008-2009 market bottom. And I believe we also saw that back in 2002, which I don't have here on the table. So we haven't seen that. As a matter of fact, we're at 57% now. That's a very high number. So I actually think we can test that bottom. So I think we're nowhere near a bottom in terms of this indicator. So this indicator is bearish. Now, I talked to you about proprietary indicators. So this is my sentiment risk indicator. And this indicator is around 4.3, and then it could get lower. It's usually bearish around 3, but in bear markets, I don't see it going lower below where it is now. And if you go back, and I don't have it here, I did another video on this. If you go back to previous bear markets of 2001, 2002, 2007, 2008, this indicator had a short-term bottom around 4, exactly short-term top. The indicator went to short-term bottom around 4, and that's the green line there, I should have said. The green line, the lower it gets, the more risk we have of the market going down. So now we're around 4.3. And when we're at that levels during a bear market, it means the stock market can continue going lower. So I hope that's clear for you. If it's not clear, you can look at my video that just focuses on this sentiment risk indicator over the last 20 years. Now we're going to be focusing only on Bitcoin and crypto. So here I have two indices, I should say, of sentiment. We have the Fear Greed Index on top. That's from alternative.me. And it's at greed, but it could get even more greedy. And then we have another one, trying to remember. Oh, this is from BTC Tools. And this indicator is almost at extreme greed. So both of these indices are saying that investors are greedy. So when they're greedy, we should get more careful and worried that there's too much risk going on. There's too much speculation going on. Let me just fix my camera. Okay, let's go to the next slide. Out of all the slides, this is one of the worst I've seen. This is one of the scariest, I should say, in terms of saying that we're at a peak in terms of crypto. If you look at the Bitcoin put-to-call ratio, it's rather low, but I would rather focus on Ethereum, Ether, because the Ethereum, Ether, I should say, put-to-call ratio is probably the lowest on record. But remember, these options data are difficult to understand sometimes because there's a lot of nuances to them. First of all, I'm going to give you some examples. First of all, we're looking only at the March data. And then we're looking at open interest. So there's a lot of different things to look at. And if you look at the put-to-call ratio, I put an arrow there, red arrow. It's only a 0.16, meaning that the majority, nearly all, about 84% of the contracts, open interest, are for call options on Ether. And what makes me even more worried is that they're playing lottery tickets. Basically, the call option strike prices are at very high levels. Remember, Ether prices are only about $1,500 to $1,600. So if you look at this table here, you can see those green bars. Those call options are at very high levels, or over $3,000 on Ethereum. That is insane. That reminds me of what you're seeing in the call option market for Tesla. Investors are doing the same thing. They're picking very, very high call option strike prices for Tesla, which to me is showing that there's too much gambling going on in the stock market. Implied volatilities are way too low. Here you can see Bitcoin's implied volatility. It's gone up a little, but remember, it's being pulled up because of spot volatility going up, because Bitcoin prices made a V movement. It went down after FTX and then it went up suddenly. So I think volatility is even lower than you can see here. It's pretty scary. You don't want to be bulking up on Bitcoin and filling up your bags when volatility is so low. You want to buy Bitcoin when volatility is hitting high levels. And you can see the spikes here, and short-term and longer-term volatilities. So those numbers up there, they signify the time periods. So you got 7-day volatilities up to 180-day volatilities. Now the Bitcoin futures, the funding rate, this is on Perps, perpetual futures. So you want to be buying Bitcoin, more of Bitcoin. You want to be filling your bag more so when you've got red, when you got the funding rates turning red. but they're not red now, they're green. So that means investors are paying commercial players to take the other side. So they're paying up to buy Bitcoin futures. So that's not a good sign. So this is bearish. Now, every time I look at anything, whether I'm analyzing industries, stocks, crypto projects, I always look at the contrarian point of view, meaning where could I be wrong? So here are 4 examples. Number 1, I have a daily indicator which is only neutral and actually hit an all-time high a few weeks ago. So, and that indicator measures like momentum, especially of what's going on with speculators and meme stocks. And you could see in my past video on this, I did publish this, that it was able to predict the recent momentum we're getting. So I'm not sure how long this indicator works for, meaning when it gives a buy, is it for a week? Is it for a month? So I'm considering this neutral because it hit a new high and then it came down to a neutral level. So I'm not sure how to read that because this is a new indicator. I only have 2 years of data on this indicator. I like to have a lot of, and back test a lot of data. So I like to back test over many years or forward test over many years. Number 2, the altcoin index remains in Bitcoin season, which is considered bullish because when it's in Bitcoin season, that means there's less speculating going on. But I don't see that in individual coins. We talked about that earlier. We talked about how there's a lot of altcoins doing really well. So I think the reason why the altcoin index is still and remains in Bitcoin season is because they're using moving averages. And it takes time for those moving averages to change from Bitcoin season to altcoin season. Number 3, and I mentioned this about commitment of traders and speculators on the futures market. There's lots of different types of futures. And in some of those futures, speculators are still shorting the market. And they're shorting the market, for example, in the Russell 2000 heavily. So that's usually considered a bullish sign. So I'm not really sure what's going on with the speculators in the futures market. Like they're bearish on VIX, which means they're bullish on S&P 500. But on the other hand, they're shorting the Russell 2000. So which is it? So maybe we can consider the futures market neutral. And lastly, we've had a lot of leverage come down. I don't need to talk to you guys about leverage. There's been a lot of chaos on this area. So usually when leverage comes down, that's a bullish sign. And we saw the bankruptcy of Genesis, problems with DCG Group, with GBTC and Genesis and what's going on with Gemini, FTX, Alameda, 3AC, the hedge fund, Voyager, and we've had a few bankruptcies within miners and some near-death experiences like Argo Blockchain. And so it looks like in terms of leverage, that has come down and we're in a safe place there. So this is data points that disagree with my thesis, basically, that the market is about to come down and that the market looks like it's at a risk area. So overall, despite what I said, I think the majority of indicators are saying that we're in a crazy market and that risk is high and that the stock market and crypto market may come down soon by February. And one example I'd like to give you is 2 examples, actually. In the crypto market, I wanted to talk to you about Aptos. Aptos is a project I do not like. They have a lot of coins coming on. They have a huge vesting schedule where whales could just dump their coins in the market. Yet, that crypto has gone up 400%. Yes, 4 times in the last few weeks, which is insanity. And Tesla stock has gone up a lot in the last few weeks too. And to make it worse, you can see this article from the Wall Street Journal. Like I was saying, making it worse is that Tesla investors are buying Tesla call options and for out of the money call options. Basically, they're buying lottery tickets. And you can see on the right side here, it's showing that Tesla is like the number one call option. Well, that's everything. I'm turning bearish on crypto, Bitcoin, and the stock market. And so I want you all to be careful. Thank you all for listening, and come back to Lem's Cryptoverse. Bye-bye.